Number we didn't mention, headline earnings up 10% to 53 million rand. So it looks like there has been a marked turnaround from where you sat 6 months ago.
Yes, we've seen a good growth in loans and advances by 23%, which is very substantial, and I think is certainly out of line with other banks. And we're very happy to see this. Obviously that comes with a bit of new business strain in terms of the cost of bringing on board that business. But now that the business is on board and the momentum is there, we expect our figures to improve.
Who's borrowing from you at this stage? Because there has been talk, if you chat to any economists, saying businesses aren't willing to raise money at this stage. Consumers starting to come back to the party, and you are really seen as a business bank.
Yes, we are a business bank, so we're not dealing with the consumer directly. I suppose indirectly we are. But in our particular chosen markets, we are seeing good demand coming through. The SMEs are definitely improving. There is growth in the economy, and I think that they're starting to capitalise on that growth. But we've been working on this for a while now because we've been in a strong infrastructural build-up over the last couple of years, and now we're starting to see that pay off.
What about the quality of these loans and advances you're making? Are you still being as selective when making these loans?
Absolutely, we certainly are, and we're quite pleased to see that our credit losses have come down quite a bit as a percentage of loans and advances, as have our non-performing loans. So we're quite happy with that.
Yeah, so your credit impairment losses down from 2.1 to 1.6%.
Yeah.
How would you expect that to move going forward? What have you seen coming into the second half here?
What we saw a couple of years ago was 1.2%, and that's probably our norm. With the recession, that went right out to 2%, and we hope to go back to 1.2%.
And how long do you think it would take you to get back to that level?
Well, we're already halfway there, so we should be there within the next 6 to 12 months.
Outside of banking, how are other areas of the business looking at this stage, such as private equity?
Yes, so we haven't had as much success in those areas, in the non-banking or the non-lending businesses, and our energy is now being focused on those areas to get them up. But those businesses have taken strain with the economic situation.
What's capital looking like at this stage? Because there has been criticism in the past that you were sitting with too much capital. Some investors calling perhaps for a special dividend to reduce those capital levels. I think last year you said you'd rather keep that capital, look for growth opportunities and retain a buffer as well.
Which is exactly what has happened. So you'll see that our capital adequacy has come down a bit. But with the new regulations coming out, one needs to have a good buffer, because we are not still sure exactly how this is going to play itself out.
What sort of growth opportunities are out there for a bank like Sasfin?
Well, we think they're fantastic growth opportunities. As I say, we concentrate in a particular target market, which is the SME market, which the big banks are not, we don't think, as that good at as we are. We have the agility, we entrepreneurial ourselves, and we relate well to our clients.
So would you be looking at organic growth, or would you be looking at acquisitions perhaps? You were talking to Mercantile a year or so ago.
Yeah.
That deal didn't happen. Would you look for a similar deal perhaps?
No, I don't think we're looking for acquisitive growth on the lending side of our business, but we may be doing so on the services side of our business.
Dividend up quite nicely, and that was something you also came under fire for last year when you did reduce that dividend. Can investors look forward to a higher dividend payouts going forward?
Yes, well, we've always stuck to our 40% of earnings as a dividend overall for the year. We hold back a bit at the interim stage, and then we pay the full amount out. So we've never really cut back on dividends.
What are some of the risks you see going forward from here? Because yes, the economy is recovering. There are still some risks out there. And how do you see them in a banking space?
Yes, well, look, there are clouds on the horizon. There's no question about that. And of course, with the Middle East oil situation, that is a worry, because if oil prices stay high for a long time, that will move into the inflation figures, and that could then also translate into our interest rates, which could depress the economy. We're also very concerned about the new regulations. We're not sure exactly how they're going to affect us. They will also affect liquidity, because South Africa has a shortage of liquidity for banks. So banks have traditionally funded themselves with demand deposits, and now we need to go for term deposits, and there's a shortage of term deposits. So those term deposits are being bidded up by the various players in the market.
And when interest rates start going up, just quickly, how does that affect you? How does that affect your customers?
Well, it depends how much they go up. If there's a steep rise in interest rates, that has a terrible effect on our customers, as we've seen it over the years when that's happened before. I don't think anybody's expecting that. I think we're expecting interest rates to remain pretty flat for the rest of this calendar year. But one doesn't know how the Middle East and other inflationary factors are going to play out.